Private equity has one job: buy the company, fix it, sell it for more than you paid. So when I tell you a firm just sold Hot Topic for less than it paid 13 years ago, that sounds like a failure. It wasn't. In the next few minutes, I'll show you the one filing from 2015 that turned an apparent loss into a win, and how the people who funded the deal, not the firm, were left holding the risk. Every number here is off the record. The 2013 merger filing, the bond documents, the 2021 IPO, and this month's sale announcement. Watch what actually moved. August 6, 2026. Sycamore Partners, the private equity firm that has owned Hot Topic since 2013, agrees to sell it to the company behind Spencer's and Spirit Halloween. Bloomberg puts the price around $350 million. Now rewind. 2013. Sycamore bought Hot Topic for $14 a share, cash, about $600 million, a 30% premium. Took it private in June, $600 million in, roughly $350 million out, 13 years later. On the surface, private equity bought a mall brand, wrote it down, and sold it for a loss. Here's the problem with that story. It only looks at the box. It ignores what Sycamore quietly took out of the box first. In 2013, Hot Topic wasn't one business, it was two, wearing one name. There was Hot Topic, the mall retailer you're picturing, and bolted inside it was a fast-growing plus-size brand called Torrid. Same company, same filings. One owned the other. And here's how the buyout was paid for. When Sycamore took Hot Topic private, most of the money wasn't Sycamore's. About $335 million of it came from bondholders, big institutions like GoldenTree and Eaton Vance, who lent against the company, secured by a lien on nearly all of its assets. Stop and sit with that. The firm's name is on the deal. But the people who actually funded most of the $600 million were the bondholders. Their money bought a company that contained a slow mall retailer and a fast-growing brand. So the obvious question, the one that runs this whole story, why would sophisticated lenders take that side of the trade, and what happens to them if the two halves get separated? 2015, 2 years in. Hot Topic sells Torrid. Sells it to whom? To Sycamore. The owner of Hot Topic sold Hot Topic's best asset to the firm that owned Hot Topic. Both sides of the table are the same people. Reported price, about $55 million. That's the filing. Read plainly. The growing brand walks out the door into a clean new company that Sycamore controls, carrying almost none of the buyout debt. The debt stays behind on the mall retailer. So now the two halves are split. Torrid, growth, little debt, room to run. Hot Topic, the mall business, carrying the borrowed money. Same owner on both sides, just rearranged. Sycamore's position then and now. The 2015 separation complied with the bond indenture. The contract allowed it. Hold that thought. Because the contract allowed it, and this was fair to the people who funded it, are not the same sentence. 2021. 6 years after that $55 million transfer, Torrid goes public on its own. July 1st, 2021. Ticker CURV. It prices at $21 a share and pops on day one. And at that price, the plus-size brand Sycamore, carved out for about $55 million, is valued at roughly $2.3 billion. That's the trade in one line. Buy the pair for $600 million, mostly other people's money. Pull the growing half out for $55. Float it separately at $2.3 billion. And in 2017, right in the middle of this, the bondholders sued. They called Torrid Hot Topic's crown jewel and accused Sycamore of engineering a scheme to strip it out and leave them holding a hollowed-out company. Sycamore called the claims without merit and pointed back to the indenture. For the record, I can confirm the lawsuit was filed. I could not confirm how it ended, so I'm not going to tell you who won. The filing is the fact. The verdict isn't mine to invent. So did Sycamore make a fortune? Here's where most versions of this story lie to you, and where the honest one is actually more interesting. Because Torrid didn't stay a $2 billion company. After the IPO, it fell. Hard. Today, Torrid trades for a couple of dollars a share, worth somewhere around $250 million, less than what the Hot Topic shell just sold for. The public investors who bought that IPO lost most of their money too. So this isn't a story where private equity printed billions and skipped away. It's something colder. Look at who was positioned to lose. The bondholders funded most of the purchase and were left secured on the half with the debt. The public bought Torrid at the top and wrote it down. And Sycamore? It put in the least real cash, pulled the growth asset out early, put the borrowed money on the part it just sold, and still controls what's left of Torrid today. That's the mechanism. It has a name. The carve-out. You buy a company that owns something worth more than itself, you separate the two, and you make sure the debt and the downside sit with everyone except you. Whether Torrid soared or sank almost didn't matter. Sycamore built the structure so it was never the one holding the empty box. And if this sounds like a one-off, it isn't. Sycamore had run a version of this before. When it owned the footwear and fashion company 9 West, creditors later alleged in bankruptcy court that Sycamore had carved out the healthy, valuable brands first and left what remained buried under the debt until 9 West collapsed into Chapter 11. Sycamore denied any wrongdoing, but to settle the claims, it eventually put roughly $120 million into the bankruptcy. Look at the shape of it. Take out what compounds. Leave the debt with what's left. Once is a deal, twice is a playbook. And the same shape is sitting right there in the Hot Topic story, if you know to look for it. So let's answer the question we opened with. Did Sycamore win or lose on Hot Topic? Honestly, we can't put a clean number on it without their books, and Torrid's own collapse means this was no billion-dollar home run. But that was never the right question. The right question is, who was built to lose? And the answer is, not Sycamore. They bought a company with mostly borrowed money. They moved the one asset worth keeping into a company they controlled for a related party price. They left the debt on the shell. They floated the growth half at the top, and this month they finally sold the empty container, the part that had already served its purpose. That's why sold for less than they paid means almost nothing here. Sycamore didn't really pay $600 million, and what they sold this month wasn't the thing worth having. The thing worth having left the box in 2015. Here's what to take with you. When you read that a private equity firm lost money on a company, don't check the headline price. Check whether anything valuable quietly left first, and who got left holding the debt. Because that, not the sale price, is where the real trade lives. And what does Spencer's actually get in 2026? About 615 Hot Topic stores and a name. No Torrid. They're buying the container. The thing that was inside it has been trading on the stock exchange, on its own, for 5 years.